Hello, everyone. We have more deal reviews here. Michael and I have been talking about these properties the last couple weeks here, and they finally did close over the past week or two. So now that we got final numbers in, we're going to run through it and kind of give a breakdown on exactly what we did to the properties, both properties, and show the final numbers there. We'll first show what we thought we were going to make, what we thought it was valued at, and then you get to see the numbers here and see how it goes.
Yeah, sounds good, Paul. I'll start off here with the first property is in Minnesota, Stewartville. If we go here, it's a 5'2", 2148 square feet. And I'll click the picture here on realtor.com to show some pictures what it looked like when we listed it.
Yeah, it's a nice looking little property, It did need a lot. Nice wood floor.
Nice wood floors, slightly dated, in some of the rooms, but it's a great starter home for someone to go in there and do as they like.
Yeah, and they can
last 15 years with given the style. Cabinets are probably put in like early 2000s, given the style. Still really good condition. Overall large property, but
it's a big house. Sometimes we get nervous with the big houses, but this one was in pretty darn good shape, and you could tell it was pretty well taken care of by the former owners. So
yeah. So going back to the deck, we picked this up, surprise, at an REO online auction, and that's how we acquired it. Funding on this one, I believe we used one of our private lenders, Paul, right?
Private lender on this one.
And then renovations. Before we get into that one, we did our initial analysis. Numbers made sense on Zillow, and again, we repeat this as our previous deal since we're buying out of state. We tapped in and found a good local agent that kind of provided their own independent analysis. It confirmed to what we were seeing, and we moved forward with this property. And then we'll show you here next what we originally thought here on the left. We originally thought, max bid of 85 because there was a 5% buyer's premium that the auction house charged. And, if you assume 4 months of holding costs at the time, since we were thinking just to buy and renovate and buy and resell as is, no renovations, we had the as is value at $250 in the as is condition. And we were thinking, okay, we get net around $30,000 on this deal after paying out a holding cost and selling costs, etc. But what ultimately happened is total purchase price, so this included the buyer's premium, I believe, was at $192. So we kind of stuck to our max. But upon further review with the agent, we made some minor repairs, and we thought we could get a lot more for it, like $299, and that's what ultimately happened. So we went from expecting a $30K fee, basically in the wholesale, to a light touch rehab and getting $66, basically over double what we thought we'd get.
Yeah, it's nice when we get these bonuses like this. You just never know sometimes what it's going to be like, and one agent might tell you something and others in a total different ballpark. But this guy was right on the ball with everything. And you can see we only put in, it's just under $6,500 in a rehab. So really, really not too bad. Holding time wasn't too bad, but it was more expensive property. So the interest ate up a little bit more, holding cost ate up a little bit more. And of course, the selling cost on an expensive property like that is our biggest expense. And there were taxes and things like that as well. But still, $66,232 net profit. Pretty darn good, right?
Old, basically.
Yep. Yeah, we can't complain one bit about this one. Beautiful.
Kind of minor. It was like some minor plumbing, if I recall correctly. Nothing major at all.
Right. There were a couple of, it's winter. It was winter when we acquired this up in Minnesota. So you're definitely going to have some burst pipes here or there. It's going to winterize it properly. So we had a few that we had to take care of. That was our biggest expense, I think, the plumbing to get done. Then the cleaning, and some minor stuff. I don't even know if we had to do much painting. I can't recall on that one.
No.
Yeah, I didn't think so either. But it was minor stuff, mostly clean up, clean out, and plumbing repairs. And that's, if we just would have wholesaled this property to somebody else, we might have made 20, right? But putting it on the MLS here and doing the minor repairs, now you sell it to an end buyer and you make 66 instead. So it shows the power of utilizing today's market in the MLS with lack of inventory out there. People don't mind getting a dated property because they can then force the equity up further by updating it, right? Changes some things out, maybe updating the kitchen. The bathrooms were decent, but updating some other stuff, and they can add, they can make it worth probably $350 if they update it enough.
Yeah. It's a key thing I want to highlight here is be strategic on what repairs / renovations that you want to make, because obviously a $6K rehab investment turned out to be over a $30K return, which is a great return on your money. It doesn't have to be full blown always. For us, it was like fix the plumbing, a few other things. We can now get any type of retail buyer in there with a conventional mortgage, and that happened to be the case.
Yeah, no, that's perfect. This is our bread and butter. And we find a lot of these, Mike, on the online auctions. People think you're just getting, properties that are completely run down and destroyed, but that's really not the case. We find a lot of gems out there. There are some obviously that need a lot of work, but you can see in this one here really did not need a lot. And those are the ones we target, and we'll do them in any market that makes sense. And you see what happens here. Nice net profit.
Yeah, they're still livable, but very dated, and maybe some minor repairs basically is the ideal scenario.
Totally.
All right, let's go to property 2 now. This one's in Louisiana, Harvey, Louisiana, and pull up the pictures real quick on the after. So this is a 3.2, 1,800 square feet. Nice little rancher here. All right, Redfin hung up. Again, property, dated floor, paint recently though, looks nice. Cabinets are older, but looks nice because there's newer countertops and appliances on them. Bath's been upgraded recently. So it's a perfect house of a mix of dated and a mix of updates, essentially.
It's got some nice updates in the kitchen, the bath. Basically, they just painted the cabinets, repainted white through, but they threw granite on it, and it looks really good. It pops, a little decent looking kitchen. Updated appliances, lighting, shows how much lighting can do. You have nice ceiling fans in there, and nice light fixtures in there, and it just makes it look a lot better. And they went with a nice gray neutral color. The floors look great. So, and it's got nice landscaping around it. Surprisingly good.
Yeah. So this was a nice little property. Again, we go back to here. We picked this one up at an online REO auction. We already had an agent in the area that kind of went and looked in the windows and confirmed from us the condition, which helped out a lot, gets us more comfortable with what our numbers should be. Mm-hmm. And then funding for this one was another private lender that we used. So it's the power of private lenders, and check out other videos that we have out there on how to, work with private lenders to acquire more and more real estate so you can scale your business.
Let's touch on that real quick, Mike, because This is such an underrated thing. You and I talk about this a lot, where if we would have gone with an asset-based lender with Kiavi or Dominion Financial Lending One, say one of those, we'd had monthly payments to make on a property. It would have had to pay a lot of extra points and closing costs and stuff, where with a private lender, we're able to just backload the deal. We don't pay any monthly payments. We pay them when we close on the property. So not taking additional capital out of your pocket. And it's more simple, right? You have less to worry about. We name them as the loan loss payee. They get a mortgage to back it or a note, whichever they prefer there. Some of them don't want a mortgage recorded because then they have to do a rescission of the recording, right? And that takes time and energy. So some of them just want the note, know it's going to be a short-term, quick flip, and then we go that route. It just makes things so much simpler. And we did a series of this, Mike, on private lending. So anybody is interested, go check out that series because we get into pretty good detail on things there.
Yeah, we basically answer like 10 to 15 commonly asked questions on taking you from A to Z on private lending there.
Yep.
So with this deal, we originally thought the numbers here on the left in the image here. We decided on a max bid of 142. Again, this property had a buyer's premium. This is the amount that goes to the auction company. And so we were all in, call it with some closing cost estimates and, assuming a 4-month hold at this time of 156. We, doing our analysis and independent analysis from the agent, we thought as is value would sell for 200 and we would net around 30K essentially on a deal like this. What ultimately happened is we actually meant a little bit less on this one. This includes the buyer's premium. So we went a little bit above our max at 153 here. We ended up having to put about 3,000 into it. Your typical, lender interest from the private lender we talked about, holding costs, selling costs. And we ended up selling for just under what we thought it would at 200. We sent it at almost.
It was 199.9, Mike. But what happened is we had to give them a $3,000 credit. There was plumbing underground that could have been an issue. Yep. So we decided instead of just digging up ourselves stuff, we just gave them the credit. They were good with the credit. So that's the only reason we were off. Our numbers were spot on, but that's what reduced our end profit, really.
Yeah. Yeah, that's a good point. Sometimes if you do find something, it might not always make sense to do the repairs. Give them a credit to do it. And that way you just move on with the property and they handle it from there on out. Less things to manage from a rehab perspective and the deal's not closed, they might walk away while you're doing that type of thing as well. So better to focus on the speed of the close versus maybe doing all the repairs yourself.
Yeah, and we're not going to complain about $21,000 in profit, right? That's usually generally our target. We want to be 20K or more, as many of these as we can. So we still hit at least our target minimum in that. And we didn't hold this thing that long, 2 or 3 months, I would say.
I think it was like 2-3 months. So it's actually less than our estimated 4-month hold on these wholesale deals. So,
right. And that helped. And there's one thing, if you look at the last 2 deals here, one thing that we could do to increase our profit, obviously just a flat fee listing, we could do. But the thing is, it's really not worth that for us. Mike and I don't mind paying that because we're getting an agent, good boots on the ground, who finds us good contractors, finds us people to mow the yard, and does all that stuff. So sometimes you think you can make a little bit more profit, but is it worth it? Because now you've got a lot more hassle, a lot more day-to-day tasks when the realtor can just handle and take care of all these things, and you just pay them that extra 2.5% commission.
Yep.
It adds more to our selling costs, but it saves us a lot of hassle, which is
you factor in lifestyle versus doing it yourself and the cost of that, and you got to make the best decision for yourself. Some people might be okay taking on that extra responsibility and flat fee. We choose to work, spend our time in doing better things, essentially.
Absolutely. Yeah, and target more properties, right? And be able to, instead of pulling our eyes off the next prize, right now we're able to keep it on there and continue doing it because we don't have to worry about the day-to-day nitpicky stuff with handling the property. So these are 2 great examples of what you could do. If you look at the 2 profits, you're at 66, you're at 21. 2 deals, you're at what, 87,000 and change, 87,000 and change. That's just 2 deals we did in 1 quarter.
In 1 quarter, yeah.
In 1 quarter. Think of if you do that each quarter, how much you're doing. You're replacing your job, you're replacing your income. For those people interested out there, it's reoauctionacademy.com. You can take a look. We do a webinar where we go through some stuff, some more examples, kind of like what we have here, and talk about what we do. I'd advise you to sign up. Our program is $5,500 for the full-fledged group coaching program, or $497 if you think you can do it yourself. And if you do that, $497 do it yourself, you want to upgrade, we could just credit you that $497 towards the $5,500 down the road if you want to. But just definitely, if you want to live a lifestyle of your choosing, it's a lot easier doing it this way, guys. Buy it on online auctions whenever you want to, compared to doing direct mail where you need a whole team. Mike and I have both done that in the past, right? We've been there, done that. This is so much simpler. We like this so much more.
Yeah.
So, if you guys are looking to get into our coaching program, now would be a good time because we're getting into the time of year where they're going to start to unload in the fall, right? We talk about this a lot, Mike. And it starts in about September?
Yep, it's usually in September, runs about through, call it February.
Yeah, right through February. And that's the time where you acquire a lot of different properties. And that's the time where we acquired these deals, for example. That's where we got them under contract. And, they turn into profits right now. You always got to kind of feed it there, guys. All right, thanks for tuning in, and we'll catch you in the next episode.